Hello and welcome to The Pitch, brought to you by Livewire Markets. I'm Ali Selby, and today we're talking all about Japan. A lot of us are travelling there, but how does it stack up as an investment opportunity? To find out, we're joined by June-Yon Kim, who's the head of Japanese equities at Lazard Asset Management. Thanks so much for joining us today,
Thank
June.
you for having me.
You've been investing in markets since 1996, quite a long career in markets. How does the current opportunity in Japan stack up against previous cycles?
In a word, I think this is probably the best opportunity we've seen in nearly 3 decades.
Wow.
Japan is, it's been a country which has been stuck in deflation for nearly 3 decades, and it's had to overcome a significant amount of overvaluation. Right now, we're finally seeing a confluence of events, which is putting Japan in a very good spot. One, in terms of corporate tailwind, in terms of governance improvements, that's actually accelerating more recently. But more importantly, Japan has finally exited deflation. I think a lot of the reasons and sort of the peculiarities of the Japanese market can be explained by deflation. And with Japan normalizing, what we're going to see is a much different Japan compared to what we've seen over the last 10 to 20 years. And I think that's extremely exciting.
You talked about some of the big tailwinds there. Are there any risks that you think investors should be aware of?
First and foremost, the biggest risk would be, obviously, we slide back into deflation. A lot of the views that I have are premised on the fact that Japan has seen the end of deflation. From a valuation standpoint, we're in a much better spot compared to where we were, 10 or 20 years ago. So even if we backslide into a little bit more of a deflationary environment, I don't think it would be completely detrimental to the market outlook, but it would definitely be a headwind again.
With those headwinds and tailwinds in mind, what are you looking for when assessing companies that make their way into your portfolio?
We are a fundamental bottom-up team. We spend most of our time meeting with company managements, evaluating more or less, as we see industrial change or sectoral change, how is that company positioned? Are they a winner or a loser, very simply in those terms? And what are they doing from a bottom-up standpoint to really sort of defend their position, improve their position from a competitive standpoint? Our job is stock picking more so than anything else, and what we're trying to find are companies which are adjusting better to their competitive environment relative to others.
Okay, with that in mind, which stock do you think is adjusting better to its competitive environment? What's your top pick within Japan today and why?
In general, we don't really discuss our top picks, but let me talk about this shift away from deflation. The portfolio is significantly overweight financials. Obviously, with deflation, you had a declining interest rate and declining net interest margins. If we're right about this view of exiting deflation, we're going to see a period of normalization as you see increasing policy rate, which will translate into improving earnings spreads or lending spreads for a lot of Japanese banks. And we think the financial sector is very well positioned to benefit from a move away from deflation into a normalized period of inflation overall.
Could you talk to one example that you like in that space?
One large holding that we have is MUFG, Mitsubishi UFG Financial Group. They're Japan's largest bank. Historically, they've always been viewed as probably one of the best managed banks in Japan. They have a very attractive book of business in the fact that they're diversified through their ownership of Morgan Stanley in the United States. They have a 20% equity holding there, but also they're very well positioned in the domestic market overall. So we think they have an extremely strong franchise. But more importantly, as a bank, they're very focused on focusing on shareholder return and thinking about that position of capitalization and making sure that they are the most appropriately capitalized, and if they are in an overcapitalized position, that they would actually return more money to shareholders via increased dividend or increased stock buybacks.
Okay, well, thank you so much for your time today, June. It was lovely to have you here in Sydney, all the way from Tokyo. If you enjoyed that too, don't forget to subscribe to our YouTube and podcast channels. We're adding so much great content just like this every single week.